All right, today we are putting the stock STA under the microscope for a full technical checkup. Just like a doctor would, to see if its recent surge is a sign of good health or if there are some underlying issues we should really be worried about. Let's dive in.
So, you've probably seen it. STAI has been on an absolutely wild ride lately. Huge gains followed by some pretty stomach-churning drops. And while that kind of action is exciting, it also makes you wonder, right? What's really going on under the hood? Is this a healthy, growing stock, or is it kind of like a ticking time bomb? Well, today we're digging into the data to find out.
Every good checkup has to start with the patient's history. And for STAI, believe me, the last 3 months tell a pretty dramatic story of some extreme highs and some serious lows.
Now just look at the scale of these swings. Seriously, imagine being on this ride. You're soaring up to 74 cents in July, feeling great, only to watch it get cut by more than half, plummeting to just 35 cents in early September. Ouch. But then, out of nowhere, it stages this massive comeback, closing at over 62 cents on October 10th. This isn't just a gentle wave, this is a full-on storm.
But here's the kicker. After all that turbulence, all that drama, if you had held on for that entire 3-month ride, you'd still be down 16%. And that's a really critical takeaway. Even with that big recent rally, the bigger picture has been kind of painful. This tells us we need to look a lot closer.
All right, history lesson is over. It's time to put the stethoscope on and check the current vitals. And you know what? Right now, on the surface, the heart is beating strong. Let's take a look at these bullish signals.
First up, let's check that short-term pulse. The stock's price is sitting above its 5-day moving average. For us, that's like a doctor seeing a strong, steady heartbeat. It tells us that in the very near term, the momentum is definitely on the side of the bulls.
Okay, now let's zoom out just a little to the medium-term view, and yep, same story here. The price is also comfortably above the 20-day moving average. So this isn't just some one-day fluke. This positive trend has been building for a few weeks now.
And this pattern holds up even when we look at the long-term view. The price is trading above the 50-day moving average, which just confirms that bullish trend. So, from every angle we're looking at, short, medium, and long-term, the moving averages are all giving us a big thumbs up.
But wait, the good news doesn't stop there. The MACD, which is basically an indicator that helps us see the strength of a trend, is also positive. This suggests that the bullish momentum isn't just there, it's actually getting stronger. You combine that with the awesome recovery from those September lows and the fact that the price is holding its trend line, and you've got what looks like a very healthy patient. But, any good doctor will tell you, you can't just look at the surface. You gotta run the lab tests.
And this is where things get really interesting. Because when we start digging into those detailed lab results, we start to see some potential issues hiding just beneath the surface. These are the warning signs that we absolutely cannot ignore.
So before I show you the number, let's quickly talk about a super important indicator, the Relative Strength Index, or RSI. The easiest way to think about it is like a tachometer for a stock. It tells you how fast and how far the price has moved. If that needle gets too high, it means the engine might be running too hot, what traders call overbought. And look at that. STI's RSI is reading 70.62, which puts it squarely in that overbought danger zone. This is a huge warning sign. It's like the engine is revving way into the red. It strongly suggests that the recent rally might have been a little too much, too fast, and the stock could be due for a cool down or even a pullback.
And there are other red flags in these lab results. The linear regression slope, which is just a fancy way of measuring the overall direction, is actually slightly negative. That kind of hints at an underlying weakness, even with the recent surge. Then there's the ADX indicator, which is like a speedometer for the trend itself. It's pretty low, which tells us that even though the trend is bullish, it doesn't have a lot of power behind it. And finally, look at what happened on October 10th. The stock shot up to 91 cents during the day, but then closed way lower. That is a classic sign of profit-taking. Investors got spooked and started selling, which can create a tough ceiling for the stock to break through.
So what do we do with all this? We've got some strong vital signs, but also some really worrying lab results. What's the final prognosis? Well, it looks like it's all going to come down to a big battle between the bulls and the bears, and it's happening at some very specific price levels.
First, let's look at the bull's line in the sand. This 55 to 60 cent range is the critical support level. Think of this as the floor, or a safety net. As long as the price stays above this level, the bulls are still in control.
And on the other side of that battlefield, we have the bear's fortress.
This 90 to 95 cent range is the major resistance level. This is the ceiling. It's the price where sellers have shown up in force before and pushed the price right back down. If the bulls can break through this wall, it would be a huge victory.
So the two potential paths for STAI are laid out pretty clearly right here. In the bullish scenario, path A, if the stock holds that critical floor between 55 and 60 cents, the analysis suggests it could make another run at that 90-cent resistance ceiling, and if it breaks through that, the door could open up to 1.15. But in the bear scenario, path B, if that floor breaks and the price falls below 55 cents, then the next stop could very well be a slide down towards that 45 to 50 cent zone. It is a very, very clear fork in the road.
So, after all that, let's step back, put all these pieces together, and give you the analyst's final take on this stock's overall health.
Okay, so what's the final diagnosis? Well, STAI is clearly in a recovery phase, no doubt about it. The short to medium-term trends are bullish. However, those overbought signals are a major cause for concern, and we just can't forget how volatile this thing is. In the end, it all comes down to that battle over two key levels. If you remember anything from this, remember these: the support down at 55 cents and the resistance up around 90 cents. The future of this stock is probably going to be decided right there.
And that leaves us with the big question, doesn't it? This stock has momentum, for sure, but it's walking a very, very thin tightrope, and it's showing signs of exhaustion. The technicals have laid out the battlefield for us perfectly. Now the only question left is, will the bulls find the strength to keep pushing forward, or are the bears about to pull it right off the wire? We'll have to wait and see.